Gold isn't just for show. It's been a sign of power, money, and stability for a long time. But now China's buying up gold like there's no tomorrow, and it's causing some waves in the global economy. The US isn't exactly happy about it. China's been stockpiling gold like crazy over the past year, and it looks like they've got something up their sleeve. Could this be their way of weaning the US dollar off its throne? Is China ready to reshape the global financial landscape? Let's look at the reasons behind China's gold rush and how it could change global markets in the future. China's big gold move, a smart power play. China's gold accumulation isn't just about finance. It's a well-planned geopolitical maneuver. Since the 2008 financial crisis, both China and Russia have been stockpiling gold to loosen their reliance on the US dollar. The People's Bank of China, PBOC, has been buying gold non-stop for 17 months straight, adding to its reserves. By December 2024, China's gold holdings hit 73.2 million ounces, an increase of 300,000 ounces from the previous month. This surge picked up again after a 6-month pause, which came amid rising trade tensions with Washington. China sees gold as a way to protect itself against possible Western sanctions and as a way to keep its economy stable as the Yuan faces pressure. Gold's true power comes from its scarcity and universal trust, making it a safe haven when other currencies lose their stability. By building up its gold reserves, China isn't just making its finances more secure, it's also setting the stage to challenge the dollar's dominance in global trade. But this is just the beginning. China's next move could send shockwaves through the gold market. Before we go any further, we'd love your help. Hit that like button and subscribe, and you'll be helping us reach more finance-savvy viewers like you. Now let's set a course for our next key point. Gold's rise as a financial safe haven. Gold's recent price spike isn't just about China, it's a response to growing global instability. As 2025 kicked off, gold soared to a record $2,849.5 per ounce, driven by trade wars, inflation, and rising geopolitical tensions in Ukraine and Taiwan. With uncertainty in the air, investors have rushed to gold as a safe haven, and central banks aren't far behind. According to the World Gold Council, central banks bought more gold in the first half of 2024 than ever before. China and Turkey were the top buyers, with India not far behind. This move toward gold over the dollar shows that things are changing, and the US is losing its financial dominance. But China's gold rush isn't just about building reserves. It's also a way to show that China wants to be a big player in the new financial world. If China were to back the yuan with gold, it could boost the currency's credibility and take a direct shot at the dollar's global stronghold, giving Beijing more leverage in future economic battles. And just as China's reserves were stacking up, a major discovery took things to the next level. Wangu Gold Deposit, a turning point for China. China just upped its gold game with the Wangu Gold Deposit in Hunan province, one of the biggest gold finds in recent history. They're saying it's got a whopping 1,100 metric tons of high-grade ore worth a cool $83 billion. This discovery just shows how China's a total gold powerhouse. They found 330 metric tons at the start, and surveys suggest there could be another 770 metric tons hidden underground. With a gold concentration of 138 grams per ton, much more than the global average, this deposit is a total game-changer. This discovery solidifies China's spot as the world's top gold producer, responsible for 10% of the global output. By boosting domestic production, Beijing can reduce its reliance on imports from countries like Australia and South Africa, while also gaining more bargaining power in trade talks. It also provides a financial safety net to help stabilize the yuan during market turbulence. But large-scale mining isn't all good. Environmental risks like soil erosion and water pollution are a big concern, but even with these concerns, it looks like Beijing is planning to push forward with its gold production, focusing on the economic and geopolitical benefits over the environmental costs. But remember, controlling the gold market is just one part of China's bigger plan to reshape the global financial order. Threatening U.S. financial supremacy. China's been on a gold accumulation binge, and it's not just about the money. It's a strategic move to challenge the U.S. financial dominance. For years, the US dollar has been the world's reserve currency thanks to the strength of the American economy. But that's changing. The International Monetary Fund, IMF, says the dollar's share of global foreign exchange reserves dropped from 71% in 1999 to just 59% by the end of 2024. While the dollar is still the leader, there's been a clear shift toward diversification, and China is leading this change. Beijing's growing gold reserves put it in a prime position to build an alternative financial system backed by gold. If China starts offloading U.S. Treasury bonds, or even hints at it, it could send shockwaves through global markets, driving up borrowing costs in the U.S. and Europe. And China isn't alone. Countries like Turkey and India are also stockpiling gold reserves, signaling a broader shift away from dollar reliance. If China can partly back the yuan with gold, it could make the yuan more reliable as a reserve currency and shift the balance of global financial power. But China's gold strategy isn't just about finance. It's about rewriting the rules of global trade. Ripple effects on global trade. China's gold strategy isn't just about financial security. It's also a move to change the global trade landscape. If Beijing backs the yuan with gold, it could reduce the dollar's dominance in international markets. Key commodities like oil, metals, and agriculture might start being priced in yuan instead of dollars, which could shake up global commerce. Countries that trade a lot with China might start holding more yuan reserves than dollars, which could speed up this shift and totally change the financial world. This would give Beijing more power in trade talks and let it work around U.S. financial institutions like the IMF and the World Bank. This won't happen overnight, but things are already lining up. China's growing gold reserves are part of a bigger plan to make its own money and change the global financial system. If they can pull this off, a gold-backed yuan could become a real competitor to the dollar, giving China more control over international trade and financial flows. So, what does this mean for the balance of power between China and the U.S.? Final take: what lies ahead for China and the U.S.? China's non-stop gold accumulation is a bold move with major implications for the global financial scene. Finding the Wangu Deposit only gives Beijing more power, and growing gold reserves provide a safety net against economic ups and downs and possible U.S. sanctions. If China links the yuan to gold, it could directly challenge the dollar's dominance and change the rules of international trade. So, the big question is, will the U.S. counter this shift strategically, or will it let China redraw the global financial map? The next few years will show if China's gold strategy is a masterstroke or a high-stakes gamble. What do you think about China's growing gold dominance? Could this truly be the beginning of the end for the dollar's reign? Let us know what you think in the comments, and be sure to subscribe to Globe Lines for more insights on global markets and the latest financial shifts. Thanks for watching, and we'll see you next time.